for me, it's like I just wanted to build the herd of investors who are participating in our business so that we could optimize on the referral dynamic and on the, repeat investment dynamic. And then we layer in the big check writers when we can. But to start raising money, you want to do a good job for a few different people so that you increase the likelihood that you get more folks pushed towards your business. What's going on, everybody? Welcome back to another quick solo episode here on the Multifamily Wealth Podcast. And this episode, I'm going to share the frameworks investors should use when beginning to raise capital. Specifically, what activities investors should be focusing on when raising their first $1 million, $5 million, and $10 million in investor capital. And the reason I selected these three milestones are because I think the activities that a future sponsor, GP, syndicator, et cetera, anybody looking to raise money in their multifamily real estate business, the reason I'm using these milestones is because I think the activities are different once you hit each of these milestones as you progress to the next one in terms of what you should be focusing on as an investor who is beginning their journey into raising investor capital. So this is going to be a very tactical episode. I'm going to quickly run through the milestones, activities within each, give you a framework to use as you begin scaling your business from a capital standpoint, investor capital standpoint, and give you something that you can actually implement here heading into 2026. So raising your first $1 million. We're going to start with raising the first seven figures in investor capital. And I think many of the investors who find themselves in a position where they know they want to raise money, they maybe have some folks in the network who could be investors. They've got some level of a network or circle from an active investor standpoint. They don't really know where to start, right? They don't know what they should be doing initially. There's probably all kinds of content being pushed to these folks online in regards to, start doing a podcast, start marketing. You got to set up a funnel. You got to do this, you got to do that. But for the first $1 million, I don't think that this is where these folks should be spending their time. And I think it's very simple, right? If you're raising your first $1 million, you should be thinking outbound. You should be thinking prospecting. You should be thinking just brute force to raise these dollars. And, before I share the activities, right, I'm going to take a quick detour and say, before you raise an investor, dollar or a dollar from investors, you need to have some kind of experience within the type of asset class, project, et cetera, that you are raising money to buy. You should have done a couple deals personally. If you haven't done a couple deals personally, you should be involved in the GP team in some other deals within the asset class that you're buying. You should be coming from an industry or from a line of work to where on a day-to-day basis you were working in this field, right? Maybe that's a property management company, maybe you're a broker, et cetera. But don't even start trying to raise any money until you've done this. This should go without being said, but I think you'd be surprised. I think it does need to be said, right? You shouldn't just be trying to raise money for your first deal or just for a deal in an asset class that you don't have experience in either as a professional career or a service provider. Now let's get back to that first $1 million. We're all outbound here. You raise your first $1 million through just brute force. This is texting, calling, emailing folks in your circle who have money and just asking them if they would hypothetically be interested in investing in a real estate deal that you find, right? This is going to networking events, both that are, littered with active investors, but ideally maybe some more business networking events as well, and just meeting folks who fundamentally just have some money in the bank. This is going out there and speaking with other active active service providers in real estate, brokers, mortgage brokers, flippers, wholesalers, etc., folks who might find some tax advantages in passively investing in a real estate deal. But the fundamental through line here is you got to build a circle of folks who have some money. You got to tell them what you're doing. You got to share your story at a high level, share some high level materials on the types of deals that you're looking to buy, and just start generating some level of interest. And this is how you go through the process of maybe the first two or three deals with investor capital. Maybe you raise 300 on the first one, 500 on the second one, a little bit more in the third one, and now you've crossed that $1 million threshold. But at this stage, it doesn't make sense to be thinking about systems and marketing and content or any of that stuff, right? You just gotta do it through brute force. Now, to go from $1 million to $5 million in capital raise, which is that second, second milestone, this is when you start layering in inbound marketing and content into what you're doing. So after you raise $1 million, you've probably done a deal or two to get to that point. Maybe you've done a few if you've raised small checks. You've got a little bit of a track record to point to. You've got some investors who are maybe willing to provide you with some referrals if you've shown them quick wins in those deals. Maybe you've done a refi or something like that. And now you start the process of attracting eyeballs to your business, into your opportunities in a more scalable fashion. So what does that actually mean? This means you're just putting together an email list. You're getting all the folks who you've networked with and who are in your sphere on an email list, and you share some type of consistent email marketing content that accomplishes two goals. One, that provide value to the audience that you're sending it to, market information, stats, helpful content, educational content, etc. But two, and this is arguably the more important component of this, you are sharing content that gives your prospective investor and your current investors a deeper view into how you think about the business, how you think about investing, how you think about problem solving, how you think about pursuing deals, what you believe your special edge to be, your take on current market events and news stories, etc. And that is what specifically helps to build trust passively over time, which is fundamentally our objective. So the most table stakes version of this is just the email marketing piece of it. Now, to grow your email list, you got to do some things, right? You still got to do that outbound stuff, right? Where you got to go to the meetups, you got to network with folks intentionally. But now to get more emails, you probably start to, now is when you're going to start to post on social, LinkedIn, Instagram. You're just going to talk in public about what you're doing with the objective of attracting more folks to your world. You want to ask for referrals here, which is something that we're going to talk about just as a sneak peek in the $5 to $10 million stretch. But you should be asking some of your investors once a year, hey, do you have anybody else in your network who might be interested in learning more about what we do that you'd feel comfortable facilitating a referral to? Stuff like that. You just want to get more eyeballs onto what you do. And the fundamental objective here is to drive traffic to your email list so you can get more emails on your email list. Now, you can do some bigger stuff here as well, right? You can start doing some really, I don't want to say really time intensive because they're not, but like slightly more time intensive work, such as hosting a meetup in your local marketplace, a monthly meetup where you're bringing in speakers, but you are gaining the edge in the marketplace as the guy who's more plugged in and who's, kind of the host of this meetup. You're getting more eyeballs on you and your business as a result of that. You can start a podcast, right? And everyone's doing podcasts, but fundamentally, the reason you do a podcast is to create content that is easily distributable to your email list. One, two, on social, three, and that address likely questions that you'll get from your investors, right? So you can create a podcast that also serves many different purposes other than just trying to grow the podcast, which is, do an episode, 12 frequently asked questions investors have about our deals. And then you can send that episode as an evergreen piece of content to folks who are learning more about you and your business. But to make a long story short, 1 to 5 million is where you're building the foundation of what could be a scalable engine to bringing folks to your business in the future, right? Pick a social channel to post on, post consistently, build your email list, maybe do something that's a little bit more intensive from a time standpoint, such as a podcast or hosting a meetup or something like that, or doing a webinar every couple of months. But your fundamental objective here is to build a scalable platform to continue pouring gas on in the next stage, which is going from $5 to $10 million in capital raised. Now, number one, what we're going to be doing here is pouring more gas on our, inbound fire. So doing more podcasts, doing more meetups, posting more often on social media, sending more emails, etc. Just doing what you're already doing, but a higher volume. But here, where you're really going to start to see the snowball start to grow is two things. One, it's your current investors investing again or more. Maybe you've gone full cycle on a deal, you've returned their capital plus profits. Now they reinvest a little bit more with you the second time because they trust you and they had a good experience. Or you already have some live deals, you've refinanced a majority of their capital back, and now they feel comfortable making a second investment. But both are different flavors of the same thing, which is increasing your investment from your current investor base. That's going to be really number one here. Number two is going to be referrals to other investors from your current investor base. Referrals is a huge source. of new capital, right? And that's going to be the easiest capital to close because these are people coming to you from a trusted source, whoever's referring them. And all they're going to do is likely do some vetting, maybe, have an intro call, understand your business a little bit more, maybe learn a little bit more about the actual mechanical process of passively investing. And then they're going to be folks who already are, have skipped to the front of the line or I should say, to the end of the line from a diligence standpoint. Three is you're going to be leveraging more of what you're doing from an inbound marketing standpoint. Maybe you have enough, you're investing in the business now and you hire a marketing slash content VA, somebody who's going to help you create email newsletters, who's going to help you draft broadcast email content where you're sending educational content to your list. There may be someone who's going to help you post more consistently on social, before and after pictures of some renovations, just sold, just closed type of post, etc. And maybe this is a part-time person, maybe they grow to be a full-time person, but now you're trying to scale the actual process of getting more emails on your email list, which is fundamentally, if we were to like pick one metric, like that's the easiest metric to use as like the one that you want to optimize for. But what's most important here is that you did good deals with your investors. You've gotten them their money back, whether that's through refis or through going full cycle. You've got some good stuff on your track record, and your current investor base wants to invest more and they want to refer you to other investors. And once you get to $10 million in capital raised, all of this becomes significantly easier because you'll realize that your previous investors your previous investors are going to continue to invest more dollars and more frequently. And they're growing outside of whatever they're doing with you. They're growing their business, they're growing their career, etc. They're progressing in their own worlds at a pace that allows them to have more investable capital to allocate towards your deals, and you're going to pick up those referrals at a much more consistent rate. And I remember early in my business, like one of my early goals when I was raising capital was and to raise capital from 20 individual investors. Like I forget what year it was, but that was like an objective that I had of mine. I think it was like 2022 when we started really trying to scale this side of the business 4 years ago now, coming up on 26. And part of that was, and it's contrarian to what I think many investors try to do. When I say investors, I mean sponsors, where they want to increase their average check size and they want to, find investors who are willing to invest more. And while that's great, that's a good end goal to have. It's nice to have folks who are willing to write larger checks. For me, the objective initially was I just want more individual investors in my life, despite the fact that that may, add some friction from an investor relations standpoint. It's likely going to be a little bit more work, but I know the deals we're doing are really good, and I want to just increase the likelihood that I can go out there and do a good job for these individual investors so that I will increase the chances that they make referrals or invest again. Because if I'm getting a referral from half of my investors, I'd rather be, and that's a big number to shoot for, but let's just say use it as a hypothetical. If I'm getting referrals from half of my investors, I'd rather have 20 smaller investors who are investing to 10, or I should say referring to 10 people versus five much larger investors who are referring me to two or three people. So for me, it's like I just wanted to build the herd of investors who are participating in our business so that we could optimize on the referral dynamic and on the repeat investment dynamic. And then we layer in the big check writers when we can. But to start raising money, you want to do a good job for a few different people so that you increase the likelihood that you get more folks pushed towards your business. So hopefully this was a very tactical call, or I should say tactical episode for the folks out there who are looking to raise more investor dollars. I think it's timely heading into 26, as I'm sure there are many investors out there who are like, I want to raise 5 million in 2026, or I want to start raising money in 2026. So use this episode as a template for how you should set your goals. Build some process-oriented goals around this, such as sending 15, 20 emails to my list, right? 1, 2 a month. Or it could be picking one channel and posting 100 times on that platform, right? Which would be whatever that is, 7 to 10 times, or well, it'd be more than that, 9 times a month, a couple times a week. Picking, if you're really early, maybe you're just trying to do more outbound. You go to 12 meetups and add 30 emails to an email list of folks who are accredited investors, to your best guess, right? Guessing that they're accredited investors. Set some process-oriented goals around this in 2026, and you're going to start to see a significant growth in your business as a result. We'll have one more episode here before the end of the year, maybe two, depends on if we want to release one right before New Year's. But nevertheless, I appreciate you all for listening as always. Have yourself a great rest of the week, and I'll catch you on the next episode.